You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out with everyone's favorite bi-weekly options program. Yes, it is time for the Option Block. My name is Mark Longo. As the man said, happy to join you, coming at you live, of course, every Monday and Thursday, noon Central, 1 p.m. Eastern, via the old Mixler, MIXLR. If you're not listening to us live, grab that, set it and forget it. That one link you can use for all of our shows, not just this one. And then you can enjoy, you'll get notified, of course, if you set up an account there, which is free. If you set up an account there, I know a bunch of you have, you get notified when all of our shows go live. So a nice little fun surprise during your week when we come at you with some fun live broadcasts. Of course, get the podcast wherever you get your finer podcast programs. And then wherever you listen, of course, make sure you hit us up, questions, comments, insights, pearls of wisdom. And if you like what you hear, hey, leave us a review on your platform of choice. We wouldn't hold it against you. All right, and joining me on the old program today, let's see who we got. First, all the way out to the hinterlands, to a man who's very busy today, holding down the fort while Mr. Sebastian, the Greasy Meatball, is off traveling the globe hither and yon. We have the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, how go things without the meatball, sir?
They are busy, but they are going okay. The market is not exactly, the market's actually making it easy because nothing's happening.
Yeah, it's not a hard one today to handle all the action going on out there. But we still got some stuff to highlight for you listeners. And we're also joined to help me do just that by our old friend returning now to the program for the second time, Mr. Brian Isabel from the Fidelity Trading Strategy Desk. Brian, I forget, are you east, west? Which division of the strategy desk are you beaming in from?
Good afternoon. I am in the Northeast. I'm up in New England.
So I guess we'll lump you into the East?
Yes.
The eastern portion of the strategy desk. So there you go. So if you call up and you're from the New England, you can get Brian. I'm just kidding. Anyone can get Brian on the strategy desk. I like to break it up into geographical divisions. Speaking of geography, of course, Uncle Mike still on assignment, on a very quality assignment. I'm envious of his assignment. He's off, I think, vacationing in sunny Mexico. So we'll get him back next week. Meanwhile, though, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know the drill. trading block portion of the show where we break down what the heck is trading today. And as the Rock Lobster alluded to, not exactly lighting the world on fire in terms of activity today. As we're coming into showtime, we're seeing most of the major indices kind of going, kind of shrugging their shoulders, kind of saying, we don't really know what we want to do or even do much of anything today. Most of them are unched to up slightly on the day. We have the leader to the upside, if you can call it that, up nearly 0.1% is the NASDAQ. Everything else is kind of just in noise territory at this point, but all of it kind of in the green territory. And when you have a general shrugging of the shoulders leaning towards the green, that means you're probably going to see a little bit of red on the vol screen. That's pretty much exactly what we're seeing. We're seeing the VIX cash hovering right around the 15 handle right now, which is off about 1.5 points or so from our last show. In fact, we just ticked into the 14 handle range now. So vol coming in quite a bit over there as not a heck of a lot lighting up the tape out here. Mr. Rock Lobster, we'll start with you, sir. Are we back in the monk zone, and what else is catching your eye in today's activity?
Well, we're not in the monk zone. That's the problem. We are in the not quite recovered from this inverted yield curve last week that all of a sudden everybody thinks that rates are going to get lowered in the U.S. at a 3%. Okay, the economy is growing at 3%, but we're worried. So I think it takes a while for markets to get over shocks, and I think this is one where VIX has not recovered from the shock of the kind of what we'll just call the near, it hasn't gotten off the basement floor. What we trade like low is 277 something in SPX. We haven't really gotten off of that, and VIX is not going to recover or drift lower until we do. So it's almost like we're waiting to get somewhere, and then nothing happens. So I think the option pit chat room is basically thinking, well, we need to see a little bit of rally, or maybe this just gets ugly, because basically nobody's crushing the vol. So until somebody starts crushing the vol, there are no believers as of right now. No believers.
I forgot, the monk zone, is that like 12.5? That the demarcation for that?
The monk zone demarcation is 12.
12,
so
okay.
It is if you notice, we have not been able to stay in zone 1 in 2018. Well, we didn't stay in zone 1 in 2018 more than a couple of days, maybe a week or so, which is hard to believe. And we spent all of 2017 in zone 1, which was a historic low for volatility.
2017, year of the monk, a.k.a. the most exciting year ever.
Yes. So 17 was the year of the monk. 18 was the year of the volpocalypse multiple times, as I remind you. And 2019 has been more of I would say kind of a vanilla equity year. A little up, a little down. Tried sniffing the highs a couple of times, but haven't quite gotten there because there hasn't been the news. So until, this Brexit thing is, leave it to politicians to not make any decision. Okay, we have a critical decision for our country, and we don't want to make a decision. So it's good to see that British MPs can be just as useless as our congressmen. So I feel like we got that in common with the English, but there is not a lot of reason for people to rally at this stage. And the reality is, SPX is only 100 handles from its all-time high. So there isn't enough to get people going. A trade deal with China, I think, would help a lot, and I think that would kind of lock the interest rate thing into the end of 2019. So that would probably mean they won't be dropping. So everybody's just kind of waiting for that. And earnings aren't for, 3 weeks or 2 weeks, really, until they're big. So that's what we got. We have a VIX near 15. We have a market not moving at all. What do they call that? A doji for the technical people? It's a doji when it moves up and down and goes nowhere. And that's it. Since I'm really not a technical analyst, I don't know the terms, but I just like saying doji.
It is a doji.
There you go. See, our resident technicians from the Fidelity Trading Strategy Desk.
I need help. I need help on that side.
Yeah, we're not. I think we'll turn to the Fidelity guys for all the charting because we're not big. I know Trey sounds like it. Maybe Brian is a bit too. We shall see. Brian, a whole lot of, not a lot really, lighten up the tape here today. But that said, what's been on your radar and what are Fidelity customers up to today, sir?
Yeah, it's been a pretty unique day in general. It's been a pretty unique week even. But we have some of the usual suspects, just the companies that have been popping up lately on Fidelity orders by customers page, Boeing, Amazon, AMD. But there were a couple that I saw today that I thought were interesting. One, Lululemon, up around 22% on earnings, and they beat their EPS with higher revenues. So a lot of activity in there on Fidelity. Orders by customers. Interesting thing about it is right now, I just refreshed it, it's 58% sells to 42% buys, which I thought was interesting, and maybe there's some profit taking out there from Fidelity's customers. One other one that I saw that was pretty interesting was CLWT, Eurotech Holdings, and that's probably the first time I've seen that. Very unique, up 180% today, so that's a pretty big move. They came out with some full-year earnings results, and they've had multiple halts throughout the day. And even with those multiple halts, they're popping up on the Orders by Fidelity's customers page today.
Well, you get pride of place today, Brian. I'm bringing up a ticker I think fairly certainly say we've never had on the show before. CLWT. I'm looking at it now. You're right. Eurotech Holdings Company Limited, which of course is called Eurotech. So of course it's headquartered in Hong Kong. Of course. And you're right. It's up $4.41 right now, about 130% to $7.80. And you can looking at a chart of this thing over the past year. This isn't even the top of this name. This name's been all over the place. This chart reeks of a biotech, even though it's not. It looks like got it high actually as almost $12 back in, looks like, June it hit up to $8. And over the last year, it says the high is actually somewhere around 12, which is interesting. So yeah, we've seen all sorts of craziness in this thing over the past year and change. Where is that 12 print? It's telling me the 52-week high is 12. They maybe hit 12 today. I don't know. But I don't see it on the chart here. But either way, bit of a crazy one. I'm sure this one's just lighting up the pit chat today, Mr. Rock Lobster. Everyone asking about CLWT?
Somehow that missed the entire pit chat. Somehow it did not make our list of obscurity.
I thought SIBO was next on the list of single name VIXs. CLWT, hot after GLD and SPY, they're doing CLWT just to appease the client demand out there. This is why we like talking to some of the different brokers out there, because they always have unique pockets of liquidity floating around that are kind of interesting. Speaking of pockets of liquidity, let's see what the market's got going on for some broad liquidity here. And we said not a heck of a lot lighting up the tape today. Coming into showtime, we saw things fairly light. VIX right around 120,000 contracts. The ADV coming off a little bit from its highs, close to 600,000 last week as well, down to about 561,000. SPY almost exactly at 1 million contracts coming into showtime. The ADV right around 2.7 million, so not even really a third or close to it of the ADV going up. SPX doing a little more, about 450,000 contracts. The ADV a little bit north of 1 million, about 1.2 million. The Qs about 350,000 contracts. The ADV about 750,000 out there. And we're seeing the Russell also doing some paper today, about 173,000 contracts. 312,000. Again, this is from IWM. Obviously, there's a lot of different flavors of Russell you can look at out there. But I know a lot of you like to sling IWM, so we look at that one here as well. Russell, small caps have been moving a bit of late and certainly dealing the volume. Let's see what's on the single name equity options, what's been dominating the tape today, courtesy of our most actives from our friends over there at Trade Alert. Let's look from the bottom to the top of the list, top 10. Number 10, Amazon, 81,000 contracts. Again, this is coming into showtime. It's probably a little bit more on the tape as of now. GE, exactly the same, 81,000 contracts. Number 8, NVIDIA, 101,000 contracts. Number 7, Bank of America, 102,000 contracts. Number 6, our old friend Tesla, 105,000 contracts. Number 4, our old friend COTY coming back on the old Chinese car manufacturer, e-car manufacturing tip. 115,000 for COTY, tied with number 4, Lululemon. 115,000 contracts on the tape there as well. Number 3, AMD, $125 on the tape. Number 2, Facebook, 132,000 contracts. And number 1, once again, Apple, a little bit shy of 250,000, about 225,000 contracts on the tape. Let's see any strong biases either direction. Looks like NVDA and Bank of America are the most biased in terms of call paper, with 71 and 70% respectively of their paper flow coming on the call tip. And only 61% of Apple. Apple kind of light on the call side this time. Usually very call heavy, today a little bit lighter. Only 61%, dare I say it, on the call front. I guess, let's see. I might save these earnings for a little bit as we get into around the block. Everyone wants to talk about Lululemon and Accenture. We'll get to those in a little bit. But I know Mr. Rock Lobster has to run, so I think we'll dive a little bit early into the odd block, and we'll come back to Lulu and Accenture in a little bit. Now, let's keep on rolling into the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, everyone who's tuning in, want us to talk about Lulu and sheer yoga pants. We'll get to that. Don't worry. We'll see if we can appease you in the meantime with some other weird paper. Lots of weird paper going on out there over today and indeed recently on the show. In fact, we're going to start there, going back a little bit, back to some paper. Remember, we keep an eye on this stuff. Some of the interesting stuff, listeners, we flag it in the old to be watched category to see how it plays out, because that's also informative to us and kind of interesting to see how this paper unfolds. If they were savvy, if they were in the right direction, the wrong direction. It's always interesting, informative, and a little fun. So let's start with going back to some unusual activity we highlighted back on the 24th of January, so pretty much almost exactly 2 months ago, where we talked about PA, some put love in PA. What is PA, you ask? Ticker symbol PAH. This is, what do we got going on here? Hold on, I'm getting some crazy quotes here. Let's just, let's move on from that quote, because I don't know why it's giving me that very, very weird quote. But instead, we're talking here, let's pull up what we saw here today, what we saw actually back on January, and it was the $10 puts out there in PA that were lighting up the tape to the tune of 8,124 of these bad boys going up for a quarter. And we asked ourselves, hey, what was going on with these bad boys? The market was a dime bid at a quarter for these things. So it seemed like someone really wanted themselves some puts. And going out here, looking back now, it's been about 2 months. These obviously expired in February, so about a month ago, a little more than a month ago now. So we can look back at the totality of this trade's existence and see how it performed. And if we do that, we could see that actually when the trade went up, the stock was at about a little bit shy of $11, about $10.92. Obviously, someone was loading up on the downside here, south of the 10 handle by Feb expiration to the tune of a quarter. That was a pretty size print, by the way, of course, opening. Pretty size print for a name like PA. And looking at the underlying, it never really threatened that level. It never even got close, really. The stock closed at expiration at north of $11.16. In fact, ironically, and maybe this is why the trade went up, the low of the stock during that whole time frame that this trade was live was actually the day it traded. It was around 10.92 on the day of the 24th of Jan when those puts went up. So maybe someone saw a bit of a sell-off shy of the 11 handle. They got a little spooked. They decided, hey, I need to get myself some downside while the getting is good, and gobbled up 8,000 of those for a quarter. And as it turned out, not so much in terms of it working out in their favor. And looks like, these things were, they never got close, and they never really closed these bad boys out. And looks like a nice 200,000 or so was spent on a futile effort to the downside. Of course, this guy probably had some shares, Mr. Rock Lobster, so maybe he wasn't too upset that the stock didn't tank. But still, when you drop nearly $250,000 on a trade, maybe you want something to perform out of it, don't you think?
Why would you want to make any money on a trade? So this was one of these where, okay, we're going to buy some protection. And so the hardest thing is trying to figure out what they do behind the scenes. It has all of the look of somebody that wanted to protect like an equity position. I mean, you could obviously, January, remember, was kind of sketchy. So almost everything sort of fell apart at the beginning and then rallied back. So I would say that, yes, they never got close. They didn't make any money, and they're hoping that they actually own some stock against this.
You'd hope. This guy, actually, I'm looking at now, I finally got my screen to work again. And PA, which is Platform Specialty Products. This guy was on the right tip. Again, we talk about the time frame of options. Not exactly in the right time frame because it's trading 975 right now, which is exactly, ironically, the break even of his puts. So he was a month or so ahead of the game, Mr. Rock Lobster. He was right on the downside, just not in the time frame. And so he spent his roughly 200,000 a little bit early. And if he had added just a month or so, spent a little more, maybe $250,000, he probably would have looked a little better, felt a little better, at least, on all of this downside here. So yeah, again, we said it before, listeners, it's kind of the mantra of this segment. The size money, not always the smart money, and not always the best informed in terms of time frame. And that's pretty much what we saw. I'll have to go look and see if he reopened again. Maybe he did, because he clearly had a bit of a downside concern. It probably was an underlying holder there, that kind of size. So interesting stuff. Speaking of interesting stuff, let's keep on rolling. What else came across our radar recently that we can pay off for you guys now? We're going to go all the way back to December now, December 6th, when we talked about some opening call love in Lennar Corporation. This is ticker symbol LEN, L-E-N. Trading today 50 1/4, off about $1.50, nearly 3%. So not a good day for Len today. But we're not focusing on today's paper. We're going all the way back to December 6th, where we saw, some opening call love in the Feb 40s to the tune of nearly 3,000, 2,816 to be precise, of the Feb 40s going up for $4.15. So very meaty, very rich trade. Worth noting, when the trade went up, these calls were actually $2 in the money. Stock was around 42.5 when this print went up. So it was weird for a couple of reasons. It was a pretty sized print for Lennar. Total on the day, actually, on that strike was about 5,300. So these calls are fairly active that day. The original print we saw was opening. Went up on NAM, good old NASDAQ options market. The market was for bid at 425. So you can kind of take a pick maybe where these went up, but it looks like someone bought these. They got a little bit of some facilitation there to get a little bit of a better print, a little bit of price improvement. These went up, I think, at the time when we broke them down, and I agree with it today. It looks like they leaned towards the buying side. You got to hope so, in retrospect, that that's the way they went. Because I said the stock was around 42.5 on the 6th, and then it kind of dropped off quite a bit. It dropped off about 4 handles and change, down to about 38 on the low for pretty much the entire market, which was Christmas Eve. Everything kind of hit its recent nadir then, and Len was no exception. 38.06 was the low then. And then almost immediately it turned around and shot back up to $46 just in a couple of weeks. By the 9th of January, it was back up to 46. So it rallied 8 handles, over 20% in the course of just a couple of weeks. So nice turnaround there. And then it rallied even more. By the time it got to February expiration, which is, of course, when these calls were going out, the stock was about $49. So this trade actually, direction-wise, seemed to work out. But there's where it gets a little weirder and kind of interesting. Is, again, the total flow on that strike back on the 6th was 5,300 contracts. So the OI was around 5,200 for most of that time. And then we saw little prints going up throughout the rest of that time until February expiration. We saw some prints going up 1,700 actually almost immediately after this trade went up. So about a week later on the 11th, 1,700 traded when the stock was around about $40. And so these options had taken a bit of a hit. They were down to about $330. And we saw about 1,700. So our friend could have dumped some of them already for nearly $1 loser on those bad boys. Actually, what did he paid about a $4.15, so not quite $1, maybe about 75 cents or so. But still, not a great print for this one. So maybe taking a little bit off the table, or it could have been someone else who just traded that strike that day. Probably the same guy, but again, we can't definitively associate it with this print. And then we saw a little bit later on the 4th of January, we saw another 1,000 going up, bringing the OI down to about 3,000 total now. And that's again when the stock was still lower than where it was 41.25. So the options, remember, time had passed, and we saw about a month pass, so you have decay kicking in. And then also you have the underlying kind of vacillating and trending to the downside. So these options were still in the hole a bit. They were trading about 390 or so. We saw another 1,000 or so go up. Actually, I'm sorry, at that time they were trading 3.25, which is even worse. So that's off nearly $1 as well. So it seems like 2,700 in those 2 days went up. So in the original block, they could have taken it off then and actually lost nearly $1 on this trade. But there was still some OI, about 3,000 open. And that's where it gets a little weird too, because then towards the rest of through January and into Feb, we saw that OI stay around that close to 3,000 level. In fact, coming into expiration, the OI was 28.16, and only 100 traded on expiration day. So effectively, 2,700 of these things were still open on expiration, even though there were roughly 9 handles in the money at that point. So Mr. Rock Lobster, all kinds of weirdness. You could read this a bunch of different ways. If that initial block, let's assume that on its own, ignoring the other thousands that went up that day, that initial block, this guy could have panicked and got out of it for roughly 80-odd cent losers over the course of the next month. And then clearly someone put more on and then left them open even though there were 9 handles in the money. I guess they wanted the stock? I don't know. This one's weird all over the place. Why are you paying $4.15 for a meaty call? I guess you really wanted that stock. I don't know. This is a weird one, Mr. Rock Lobster.
It is weird, and what's weird is like where do people take money? You buy a call for $4. What do you think you're going to get out of it? I mean, what you get 100%. You're like, I don't want it. I don't want to take it.
I scoff at 100% returns.
And I have this with clients all the time. I have the same problem myself and this is mentally just for listeners is I have the same problem. And I'll tell you, and I know when I should just take the money because I own something, let's say a back spread or just long some calls, and I'm up, let's say pretty good money, like, I don't know, 30 or 40%, right? Like it's a definite win. And so I look at it and I go, well, I've got like 3 months to expiration. So I'm just not going to do anything. It's going to keep going. And as soon as I say that, literally every freaking time, the stock pulls all the way back, and it takes me 2 months to get exactly to the place the calls were when I was first right about the rally. So I always find it better you get your rally, you take a chunk of money off the table on the rally. It's usually, it's great money with options when you're right, because that's the whole idea of option leverage, and just reduce the position, unless you absolutely want to take delivery of an option. You have to have reasonable expectations on how those things are going. At minimum, at least roll it up to a cheaper call farther out in time and take dollars off the table. It's like you should be doing something to harvest some money every time you have a winner. And it's like every time you look at the P&L and you're like, woohoo, this thing is going to, invent a price. That's usually about the time where the gods of options are saying, yeah, you should have taken it when you had the chance.
The options gods are fickle, and in this case they were, and maybe the client was fickle too. This one's hard to kind of read the tea leaves on because it's kind of all over the place. My initial blush is maybe that guy, that initial block got out of him. He panicked in the early going, and if that's the case, that's even almost worse because he took a hit of nearly $1, and then the things ended up working out dramatically in his favor. Even if he did, it looks like someone dumped some in that early period, so even if he did do all 5,000 to begin with, he dumped at least close to half of it when they were still a loser. So he made up on the other ones if he held them all, but he took the stock, so he gave up all that juicy extra premium on there. All all sorts of weirdness on this one, listeners, which is why it's fun to talk about on the odd block. I know you got to get rolling, Mr. Rock Lobster, so we'll get you out on this last one. This one actually is from today. Do not despair, listeners. We got some from today for you as well. We got Knight Swift Transportation Holdings, Inc., ticker symbol KNOX, KNX. Trading today, $32.55, up about $1 and change, about $1.20, nearly 4% on the day. This is the name that's kind of been all over the place over the last year. A year ago, it was trading a little bit north of where it is right now, substantially north, 45.5, so roughly $13 north of where it is right now. It's kind of vacillated to the downside over the course of all of last year. Got as low again back in Christmas Eve, the nadir for everything, right around 24. Then, like a lot of names, kind of shot back up to the low 30s shortly thereafter. It's kind of been hovering in this 32 to 34 range pretty much ever since. So what did we see today? Even though it's up, actually up about $1 and change today, we saw some upside call love and for some pretty decent size, Mr. Rock Lobster. 20,000 of the AUG 35s coming in today for $235. So are the money calls a little bit down the way and fairly rich, $2.35. They were offered at $2.40. There were $2.05 at $2.40 going up for $2.35. So someone had to get them and they had to pay up to get 20,000 of them done. This is all opening. Of course, there's going to be earnings between now and then, so I won't even belabor that subject. But Mr. Rock Lobster, this one kind of is like the one we just talked about, only that one was in the money. This is out of the money. But still, an aggressive buy in a name that's kind of been range-bound of late and for size. I don't know. Interesting stuff. What say you about this one? What does your spidey sense tell you about this one, sir?
Well, I think this is the right way to buy a call. Number one, you're buying yourself a lot of time. So decay is really not much of a factor. Also, it was a stock that, like transportation, everybody's got a little scaredy because what was it, FedEx that just had some problems or something like that. But it was a stock that was a lot higher. So it is a very, very, very reasonable, I think, call purchase. And I think trucking transportation, they're having trouble hiring people in this economy. They can't find people to drive their trucks. So I know there's been problems with that, but it doesn't look like it looks like a value play. And, the stock that was $50, it's not unreasonable that you could see, $38 to $40 by August if our rally kind of sort of relights. So I think this is a very reasonable call buy if you want to be long. It's reasonable with, probably better than average risk reward on it.
Oh, you like it more than I thought you would. Usually you take a dim view of out-of-the-money call purchases regardless of the structure without some spread or something like that. But this one, I can see where you're coming at here. It's not super crazy. He's not going like, 5 handles in the money next week, something crazy like that.
Right. So he's not buying the 50s.
Yeah, we've seen yeah, you're right. He's not doing that either. It's not a terrible strike. It was in the money not too long ago. It's a bit of a meaty play, but it's not crazy. And we've seen crazier things. You're right. I like to see some other things against it. I'm not a huge outright call buyer fan, but I guess if you got to do it, we've seen worse. That's for sure. Let's damn it with a little faint praise. And Mr. Rock Lobster, I know you got to run. You got to go put on the meatball hat while he's off gallivanting at risk management over there this week. So before you go, sir, why don't you give us a little bit of breakdown? If people want what's coming up in the land of the pit, they may want to check out.
Well, our Saturday class on volatility, April the 6th. So you can go to optionpit.com. We'll have links there shortly. Send me a note at andrew@optionpit.com, and I'll take 20% off the price of the class for you, just because you're listening to the show and you like us. So that is the nearest thing. And then we have our Pro Summit in June, which actually we only have a couple spots left. It's almost sold out already because people like it. They learn stuff. So
is that your crazy May-palooza in Chicago?
Yes, it's going to be June this time.
Oh, I'm sorry, not May. June-palooza in Chicago.
Yes, it always has to be on my wife's birthday for some reason. So that's never a win for me, but I have to make it up to her when I get back.
That's usually right around the time I head down to Florida, but I think I can maybe make an exception for you guys. And
free food from Sebastian.
That's true. That is the tastiest steak of the year because it's on the meatball. That makes it. It could be frozen Salisbury steak from the freezer. It would still be delicious because it's on the meatball, and it's a rare thing indeed. Check them out over there, optionpit.com, and give an email, Andrew@optionpit.com. Put subject line Year of the Monk, and then he'll give you 20% off. All right, sir, go about your business. I'm going to throw Brian into the deep end now. He's got to carry the show with me for the whole rest of the show. Hope he put his talking pants on, and it's time to roll on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. It's Thursday. It's time for your questions, your comments, your insights, all sorts of good stuff. Brian, you're in the deep end. Uncle Mike on assignment. The Rock Lobster has to go put out fires at Option Pit. Just you and me the rest of the show. Are you up for it, sir?
Very excited about it.
All right. Since you're courageous enough to join me, we'll kick things off in your neck of the woods. I know you guys spend your days, when you're not talking to me, you're talking to Fidelity clients, answering their various options questions. So what's on their mind of late, sir? What are some of the questions you're getting from the Fidelity clients these days?
You know, one that's popped up, and I think it has to do with a webinar that was recently done by Fidelity. One question that we've been hearing a little bit lately over on the strategy desk is people calling in and asking us, you know, when you see a large option trade, how do you know if that's an opening trade or if it's a closing trade? And, you know, the true answer to that is you don't ever really totally 100% surely know if it's opening or if it's closing. You know, you can get hints on it. You know, some of the things you can do to get maybe a hint as to whether it's opening or closing is take a look at the open interest, right? If the size or the volume of that particular trade is greater than the open interest, well, then the likelihood is that it's an opening trade, right? On the other hand, if the volume or the size of it isn't as big as the current open interest, well, it could be opening, but it also could be a closing trade. So it's a little bit less discernible as to which way it's going in that particular circumstance. One other thing that you can do is make note of what the open interest is today and take a look tomorrow. If it's increased substantially, well, the likelihood is that was an opening trade. If it's decreased substantially, then the likelihood is that that was a closing trade. A couple of the things that you can do to maybe give you some color around that trade, take a look at where it's traded in that past. Like, take a look at those contracts. Maybe pull it up on a chart and see if there's any high volume days that stand out, right? If there was a big trade or a trade with the same exact size as that one, well, you might leaning more toward that was a closing trade now, right? Maybe someone's taking something off the table. On the other hand, if you don't see any trades in the past of that size, it's more likely that that's an opening trade. Not guaranteed, because they could have been acquiring a position over time and then just chose to get rid of the whole thing all at once. But those are some of the things that can help give you a little color around whether or not it may be an opening or a closing trade.
Yeah, you know, it's a seemingly easy bit of analysis, really, to do. Obviously, in terms of if the trade is more than the existing OI, then, you know, particularly if the OI is very low, obviously that's a good starting point. We talk about this a lot on our unusual activity. We get questions like this a lot, as you might imagine, for the odd block. But if the OI is 200 and the trade is 20,000, it's a good chance that it's opening. So those kind of ones are kind of nice. But you're right. Products, we have this issue a lot, Brian, when we talk about big indexes, heavily traded products like, let's say, a SPY, SPX, VIX, where there's so much OI on any given strike, right? That you see 20,000 lot go up, but there's 180,000 open on the strike, right? That's when it starts to get challenging. That's when you really have to kind of read the tea leaves a bit. There are some services out there you can use to help. One of the ones we like a lot is Trade Alert. The retail-friendly version is What's Trading. You sign up over there. They'll do a lot. They'll show you prints, and they'll show you, if you're looking back a little bit, they'll show you how OI changed T+1, which is nice. That shows you the change in open interest, right? So you can see if that trade had a net impact on the OI to close it down a little bit. But that's kind of where the reading the tea leaves part of analyzing unusual activity gets a little funky. You have to look where it went up on the spread, maybe look at some previous trades on that strike to kind of see what other people have been up to. Maybe someone traded 20,000 a few months ago and they lifted the offer, then they came in with a trade somewhere near the bid later on, and it kind of matches up close to the OI, but not exactly. You can maybe reasonably intuit that someone's coming in to close out a trade that they bought before. So a little bit of homework is sometimes required to do that, a little bit of facility with the options market as well. But Some of the base ones, if you see a big print and it exceeds the OI, that's definitely your first clue that perhaps it is indeed opening. But yeah, OI, the place to go. And do you get that question a lot, Brian, too, on a related note? Because we still get it a lot. Do you get that question all the time? People in this day and age, they're used to executions going up in the millisecond speed, right? And yet OI only updates every 24 hours. Do you get questions about that a lot? We still do.
Yeah, absolutely. We get questions about it all the time, and from different perspectives too, right? On one side, we get people asking us, why does it only update once a day or before the next day? And then the other side of it, people also don't realize that it doesn't update throughout the day or intraday. So they don't realize it's static for the rest of the day. Once it's set, the open interest at the beginning of the day, that's what it's going to stay for the rest of the day until all the trades get matched up and cleared out at the end of the day, and they determine whether that open interest increased or decreased. So yeah, that is something we get a lot of questions on. Yeah,
it's a bit of a frustration for a lot of the active retail. There's a bit of pushback on the institutional side. Some of them don't want that level of transparency to be increased anymore. They like it that it's only a 24-hour window. The clearing side, that's a lot of technology to upgrade it. It does exist. It could be done, but it would be certainly to have it maybe intraday, at least at noon or something like that, to give you a bit of an update. But I don't think the impetus is really there to make it happen. That even though I know a lot of the active retail listeners of this show would clearly like to see a little bit more fluidity, shall we say, around those OI numbers. Let's see here. So many questions. Where to start? Here's an interesting one, kind of a weird one. I don't think we've gotten this before. This comes from M. Jean. They want to know, what is the farthest out that you recommend regular traders like me trade? Is there some Mason-Dixon line that I shouldn't cross? Thanks for all the wisdom and fun. Well, you're welcome for the latter. I like that, the Mason-Dixon line of options trading. That's an interesting way to look at it. I hadn't really thought about it in those terms, right? I mean, you say regular trader, you don't kind of say how you like to trade or what your preferred methodology or strategies are. So we can't obviously give you specifics there, Mr. or Mrs. M. Jean. I think there are some definite, rules of thumb we talked about before on the show. Obviously, if you're in the premium harvesting mode selling, you want to keep that nearer to expiration rather than farther for all the reasons we talked about before. Obviously maximizing your theta decay and all the other fun stuff that obviously kicks in to high gear in the final month or so of expiration. Now, it varies depending on where you are in the strike chain, at the money versus out of the money versus in the money, all that kind of fun stuff. So there's nuances there, obviously. But a general rule of thumb is you want to migrate that closer to the at the money. And the other flip side, that's why you heard Rock Lobster a little while ago saying he liked that call buy, because they pushed it out a little bit. He paid a little more, but they pushed it out a little bit, and the reason he liked it and the reason we tend to recommend the premium buying be maybe on the other side of that Mason. Let's say that for sake of argument, the Mason-Dixon line is just 3 months. So let's just put it there. And going beyond that costs a little more, but it gives you a little bit more insulation from that decay kicking in. It's still going to decay, but it's not going to kick into high gear, into that exponential mode, really until that final month or so. So you're going to decay, but much more slowly, which obviously is a benefit to you because it gives you more time for your trade to work out. If your trade is just decaying like mad every day, then guess what? You need a big move in the underlying to pay that back, and that's hard to get. So in general, there's no hard and fast line. People buy options in the weekly sometime because they want to hedge a very specific event like an earnings, or maybe they want to speculate on something really crazy happening really soon. There are use cases for that in the near term. People also, large asset managers who just don't have the time to really babysit a lot of different accounts. They want to just a set in and forget it type trade. They'll write a call maybe a year, even 2 years out. It's not ideal. It's not the best way to do it, but that's kind of within their available time frame. That's what they have to work with. They write a call, 10% out of the money. Let's say they set it and forget it. If the underlying rallies, stock goes away, they're happy. They get their 10%. If it doesn't, they get that premium they harvested. Rinse and repeat once a year. Again, so there are exceptions to all of these rules, but in general, I think that tends to work. Mr. Brian, I'm sure you get maybe not this specific question, which is, I think, well worded. I like that Mason-Dixon line. I mean, feel free to borrow that in your use cases going forward, Brian. But in general, when people call you up with these kind of time frame related questions, how do you counsel them?
So short answer is no more than 3 years. And I'm saying that jokingly just because most option contracts don't last more than 3 years. But the longer answer is it really does depend. There's, like you mentioned, there's use cases for everything, right? That's why options Pun is going to be painfully intended, but that's why options give you options. And at the end of the day, that's what makes a market. There's always going to be two sides of a market, and some people are going to look at the shorter term and see a valid argument for going short term. On the other side of it, well, think about the other person on the other side of that trade, right? Whatever you're finding as a benefit, they're going to be finding as a negative. So that might make them want to go out to a longer term and vice versa. So, there's two sides to every trade. And because of that, there's always a reason. There can always be a reason for going shorter or longer. And I don't think that there's any, I love the term Mason-Dixon line, but I don't think there is necessarily a Mason-Dixon line. And I like what you mentioned just a moment ago, the idea that, if you're an option seller, you might be looking at it on one side. If you're an option buyer, you might be looking at it on the other side. One thing I will say that, has probably happened to all of us at some point is you bought a put or you bought a call, and you had some expectations that something was going to happen. And you looked at two expirations, and you chose the shorter one because of the smaller premium, and lo and behold, you weren't right. Nothing happened. Your option expires, and then the next day or the next week, what you were expecting to happen was going to happen. What you were expecting was going to happen ends up happening. That's part of trading options. That's going to happen to you at one point in your life. It's not going to make it any easier knowing that it's going to happen at some point, but it's better for you to accept and know that is a possibility anytime you're trading options.
Yes, and just fair warning, MG, and I am going to borrow that Mason-Dixon line of options at some point. That's just a good term. Maybe we'll even put it for the title of this episode. So there you go, a little prouder place for you there in your creative wording. Let's see, we got to pay off. It's been a big week. Brian, on our social media front, people have been voting hot and heavy. In round one of our Broker Madness tournament just came to an end yesterday. We tabulated all the votes. We found the winners. Chris Sickle, I think his name was the winner of round one prize. They got some sweet exclusive options insider gear coming their way, courtesy of our friends over there at Lands. And so good stuff. We give you good stuff. We don't mess around with the cheap stuff. So you get good stuff. You can look like all the people on our staff, as well as a lot of the C-suite of the options world tends to rock our gear. Go figure. They like it. It looks good. So you can show off your options savvy in style with a little bit of that gear. We'll have more new prizes coming every round, so don't worry. All kinds of good stuff coming. Round two underway, but I am pleased to say now officially, Brian, you guys did it. All of your various appearances. I think that's what did it, because it is official. You guys, Fidelity, for the first time in our tournament, has made it to round two, triumphing, it looks like fairly easily, roughly 2/3 to 1/3 over Merrill Edge. So you take a little pride in that, Brian. I think it's you and Trey and the rest of your guys' appearances clearly, I think, turned the tide.
I'm super proud of us there. I do think that Trey probably had a lot more to do with that than I did. He's our superstar.
Trey is good as well, but I give equal credit to all of you guys out there. So update the standings here for round two. Fidelity moving on to round two for the first time. You're going up against TradeStation in the next heat, sir. So we'll see how that one. It just started in round two, so it's too early to parse the results yet. It's only been a few hours in, but interesting stuff. There's no easy fights anymore. We keep getting in there. We're in the Elite Eight now, so everyone's a juggernaut to take on. We've got Schwab, the former OX platform, taking on TD Ameritrade, which is the former Thinkorswim platform. So two platforms people are very familiar with in the option space, duking it out here in round two. That's a fun one. Our old friends Ally over there, Ally Invest, taking on IB, Interactive Brokers, another kind of clash of titans over there. And then we've got E-Trade, which is the former Options House and Option Monster, as well as the former E-Trade, obviously, option platform, all kind of combined into one. Taking on last year's champ, tastyworks. So a lot of hot fights going on. We saw some fun ones in round one as well. Some come from behind victories. tastyworks is one of them. They were getting smoked by E-Option. Then they turned down the Jets there in the final few days of voting and really rallied from behind. So a lot of great fun stuff. We had a record turnout for round one, so we want to thank all of you guys, and hopefully we do with the prizes. There'll be more prizes coming. It's just fun. It's a fun way. Why March Madness is fun. We need our own version in the options world, and this is it. And don't worry, Trey, there's a lot of stuff at stake for you guys as well. Not just obviously the pride and prestige of winning the greatest tournament in options. We all know that. But of course, also, you guys are going to win, if you will. Whoever does win will win a shiny trophy this year, or some sort of trophy. We haven't decided exactly what shape the award is going to be, but all the firms that have won previously is like, hey, what do we get And it always was just the pride and honor. Now we're going to have some actual hardware to go with it. So you guys are competing for something fun. I don't know what yet.
We're in for the pride and honor, but who doesn't love a shiny?
Who doesn't
trophy?
love a shiny? Maybe like a cool mirror ball trophy, like Dance with the Stars, something silly like that. We'll see. Something fun. We got to work out what that is. Maybe one of those cool holographic 3D things. We shall see. Something cool coming down the pike. Let's see here. We got time for at least one more. Let's go with some love here. We got some love from combo love from Joe and Linda. Joe and Linda saying I've been knee deep with you guys for the last 14 months. And I can't thank you enough for the wealth of information you provide. One of my favorite quotes, your generosity is only exceeded by my gratitude. I have a long commute to work in the morning, have managed to listen to all 240 plus of the Options Playbook show, plus, so those are the episodes there, plus all of the Options Bootcamp episodes, 90% of the OIC stuff, as well as in and out of the Options Advisors and the Future show. Also haven't missed an option block for the last few months. Thanks again. Well, thanks for your love there, Joe and or Linda. We love the love. We love guys like you and gals out there who consume all of our stuff. We put it out there for you guys at the end of the day. If you guys weren't listening, we wouldn't do it. So we love to have you guys. And I think it's fun to have all these different shows you guys can kind of sink your teeth into at your leisure. Obviously, we do the live stuff for people who want it in their ears right now. But we know a lot of you like it on demand. In fact, most of you do. And we're happy that you guys are enjoying it. Speaking of the live here, we've got Austin41 chiming in on the live chat saying, the yoga pant equals the greatest invention since the smartphone. I think I know what you're getting at, Austin. You want yourself a little bit of Lulu. I think we can accommodate you as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show where we tell you kind of what we're keeping an eye on for the rest of this week into the weekend. I also alluded at the top of the show, there were some earnings that were still popping off this week. A lot of people were obsessed with a couple of big ones coming into the show here this week. First off, Accenture coming in. They reported earnings of $1.73 a share, 16 cents above estimates. And so revenue also beating the forecasts, raising its full year outlook. So the market obviously liking what they were seeing out there. And of course, if you want to follow along with all this good stuff, listeners, we have the Earnings Move and Earnings Move results reports available for you for free over there at theoptionsinsider.com. Accenture, ticker symbol ACN, right now, right around close to 175, a little bit shy of it, up 830. Or about exactly 5% on the day. Let's see. Looking at their announcement, which was today before the bell. They came in from last night. The stock around 176.30, and let's see. They were pricing in 533, and they actually moved about about nearly 10 handles, 991. So not quite 2x their straddle, but pretty darn close. And that was all to the downside, actually. It got down. Actually, I'm sorry, the stock closed at 166 coming into earnings. Then it gapped up to 176. So again, you can find all that on the Earnings Move. Also, another name people are watching. We've joked about this name many times. You were talking about it earlier in the show there, Brian. Good old Lululemon, they of the infamous sheer yoga pants. Clearly, yoga pants are back in fashion and doing so for size, because the stock is up for size. They had their earnings yesterday after the bell. They went into their announcement 146.80. They were pricing in a fairly meaty 1370, so a pretty decent amount. They're expecting about a 38.5 in terms of implied vol. And what they got was a bigger move anyway, about $20, almost $21, $20.97. Again, this is in the initial blush, coming right into the opening today. As the day has progressed, it's rallied more. It's up about 22 handles to 169 out there. So this is one of our few size outperformers here on the old earnings docket. So people are saying, "Oh, earnings season's winding down." Yeah, that's true, but there still are some names that are delivering. It sounds like Brian, that Lulu lighting it up today for the Fidelity clients, and then also in addition to these names and the earnings in general, what are you keeping an eye on for the rest of the week into the weekend, sir?
So for the rest of this week, tomorrow we've got a couple numbers out. housing starts and consumer confidence, so everybody's going to be watching that. And, of course, yields. You know, the yield's been all over the place lately. The yield curve's been the talk of the town, so we'll be watching that. And before the show on Monday, I'll be looking at quite a bit of information coming out. Retail sales, PMI, business inventories, ISM, construction spending. So Monday morning is going to be a big one. So looking forward to all those numbers, looking at the for tomorrow, new homes, PMI, and consumer sentiment, and then, as I said, yields.
I don't know what this yield is you're talking about. What could possibly be so exciting out there in the yield curve, right? It's boring territory. No, just kidding. Yield curve on everyone's mind these days. Before we wrap up here, I'm just looking really quickly, see how Lulu is faring right now. Lulu lighting it up as a tape, as you might imagine today. The ADV out there is only 13,000 contracts, and as of right now, almost 10x that, 127,000 contracts on the tape. What's interesting, though, is that the underlying has been extremely one-sided, up 22 handles. So you'd expect a fairly one-sided bias to the paper flow, 80% of the calls, and that's not what we're seeing. Actually, it's exactly even, 50% calls, 50% puts, 64 roughly thousand for each of those. So interesting underlying activity, and also very interesting options paper going on out there in good old Lululemon today. All right, unfortunately, though, that music means we pretty much come to the end of another epic journey through the world of options. What a fun one it was. We started off talking about all things fun. Vol coming in, not quite year of the monk yet, but getting a bit lower in terms of activity. Not a ton lighting it up, but we did have some weird and unusual ones, including one that didn't work out, then it did, but he never took it off. All kinds of weirdness in the unusual activity today. And then looking ahead to your great question, Mason-Dixon line of options. I am going to borrow that, so whoever wrote that in, MG, I believe it was. Great suggestion there. I'm going to borrow that. And then, of course, talking about Lulu and Accenture and some other names to wind it up. Mr. Rock Lobster already left, already gave his plug, but I'll be nice. I'll give him another one. Head on over to optionpit.com. They do have that fun event every summer here in Chicago. I tend to attend it. It's kind of a fun one. You get to join us in person. Maybe we record some live shows there. You get to ask questions in person. You guys have listened to Network for a while. You probably heard a few of those. They're a little raucous, a little loud in the background, but they're also kind of fun. So if you want to check that out, optionpit.com is the place to go. If you're going to be in Chicago or maybe want to be around June, not a bad time to be in Chicago, listeners. Come check it out. It's always a good time. And, of course, our friend Uncle Mike on assignment. Check him out. Go click on the Fox over there, stcharleswealth.com if you want someone to handle your puts for you while you're on vacation. He's the guy to do just that. And Brian, we've touched on it before. Clearly the audience is liking it because they're moving you ahead to round two. They're liking the trading strategy desk. If they want to learn more, maybe they want to check it out for themselves, ask you some questions. Where should they go? What should they do, Brian?
Yeah, absolutely. So if they are not a Fidelity customer, go to fidelity.com/options. And you can learn more about Fidelity and our options trading. If you are a customer, you can actually just give us a call, or you can go to fidelity.com. You can also call and ask to speak to the trading strategy desk, and we'll be more than happy to answer any questions that you have if it's a one-on-one. Of course, you can always go and take a look at our schedule online on the Learning Center on fidelity.com and see our upcoming schedule for webinars, events, and coaching sessions. So take a look at all of those.
Yep, it's cool. Unfortunately, it's for Fidelity clients only, so if you haven't signed up yet, you haven't kicked the tires and light the fires, what are you waiting for? Fidelity.com/options. They made it easy. It's just one landing page. Head on over there, click on the button. You can see it breaks it all down for you there, the costs, the tools, all the cool stuff, so you can see it for yourself. If you do sign up, make sure you tell them you heard about them from us. And if you call Brian or Trey or any of those guys on the desk, make sure you tell them you heard them on the show. It'll definitely make their day. And let them know, hey, you're listening to the option block and you're checking out Fidelity. They'll like to know that. So again, fidelity.com/options. It's interesting stuff, and clearly it's resonating with you guys as registered at least by your voting. And on behalf of Brian, we'll throw Trey in there too. He's not on the show. Why not? And Trey and the Rock Lobster and Uncle Mike and indeed myself. I thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, for all the stuff that you guys do. Keep it coming. If you like what you hear, Head on over to your platform of choice, give us a review. We wouldn't hold it against you. Whatever. We won't solicit 5 stars. Whatever you think is worth it, we'll take it. We like it. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.